Good afternoon to you, Rohit. And yes, we are just above, a little over 100 points away from the 200 DMA when you talk about the Nifty. When do you think that we will see some sort of a semblance in this sort of a market fall right now?
So we are really witnessing what we call a free fall. And when you're in the midst of a free fall, the old saying is don't try to catch a falling knife. And that's pretty much what fits over here. In terms of levels, there were two key levels. The first one we broke today morning, 23,816, which is the low made around the 4th of November. The next one is the weekly range, which we are close to now, which is 23,700 odd. If we break this one as well, then this will set us up for heading towards 23,300 at least. And that will be the next level where we'll try to see whether markets can stabilize. But right now in a free fall, we won't presume anything that this is where it's going to stop. We're simply going to trail it on the way down till it gets to those levels.
Then, sir, if we can't even time the stop or at least predict it, what should investors do at this point of time? Just stay away from the markets.
Yeah, definitely. Investors need to stay away. They should have ideally been holding higher levels of cash. If not, it's a good time to see which stocks are breaking their levels and accordingly reduce exposure and create room to be able to buy whenever things are much more attractive. So that is sort of what you'll have to keep doing because individual stocks are actually taking a much bigger hit than we actually seeing in the indices. In fact, one of the confusing parts has been that when you actually look at the mid cap and small cap index, they were appearing like they're falling less. And even when there were bounces that we saw in say mid of October or even last week on the Trump trade, the broad market bounced much more in terms of the mid cap index than the Nifty itself. The Nifty couldn't even get past the 20-day average, and so that which is a very different behavioral pattern compared to what I have seen in the past. Whenever you're in bearish phases, mid caps bounce less, large caps bounce more. We actually saw the complete opposite of that, which is new. I don't have an explanation for it, but sort of that led the bounces. But in the large cap part, we're just seeing continued selling at every level. And now it is percolating down, I think, to the mid and small caps as they're close to breaking the weekly ranges. And if they do so, then there would be further selling there. So best to really wait it out. The last one to watch may be the Bank Nifty. I think we've really not seen that play out much because after the initial sell-off in the first half of October, Bank Nifty did not really make new lows and it has not done so yet. But we are at the bottom end of the range near around 50,500. So if we actually break 5,500, that is when you would see additional selling coming into the banking part of the market, and then that could really drive it to 48,000 or 47,000 kind of levels. So 5,500 is the next level to watch in banking. In fact, it may also be a signal of, is the market going to fall further from here? If Bank Nifty breaks 5,500, that would end up becoming one of the causes of the sell-off.
And so, what's your view when it comes to the Nifty IT index? In the fall that we have seen in the benchmark, it has actually outperformed. It has not fallen as much as the fall that we have seen when it comes to Nifty Bank or the Nifty 50 index. So it has been outperforming at least the benchmarks in India. And do you expect this outperformance to continue for the Nifty IT index?
So right now, because the IT sector tends to correlate a lot with the global markets, it may appear to outperform, and therefore I wouldn't take a very bearish view yet. But do keep watching out for what happens in the US. We've seen a strong run up on the Trump trade. If that reverses, then the IT sector could face some heat. Otherwise, it may continue to hold out.
Right. Rohit, so like you said earlier also, don't go ahead to catch the falling knife. But, when anyone sees a correction in the market, they believe that this would be the right opportunity to buy into the market, given the fact that the long-term story of Indian markets are always intact. So do you have any recommendations at this point in time that one can look at, or are you pretty wary of the market?
It's a pretty broad-based fall that we have witnessed. I think, except for IT, even the FMCG sector has taken a lot of beating. So it becomes very, very difficult to say this is the end point. And if we do look for a bounce at some point of time, it will possibly be counter trend in nature, which means we'll be looking for a retracement of the fall, not a move to new highs for quite some time. and which is why there'll be more trades than investment calls, in this period. The investment call will be slightly more difficult. For an investor, that is not going to be easy, because you're going to be picking a very small basket of outperforming stocks in a broad market that is generally in decline.
Well, thank you, Rohit, for joining us and for sharing your perspective when